Welcome to another edition of the Energy Week podcast. Ryan Ray alongside the one and only Dr. Energy herself, Ellen Wald. Ellen, how's it going?
Hey guys, everything's fantastic.
It is a good day, and I recorded the Texas Oil and Gas podcast earlier and forgot to give a shout out to my wife. Today is her birthday, so happy birthday to my wife.
Happy birthday!
I don't know how old I can say she is, but she's turned a year older than what she was, so don't get in trouble. Oh, Ellen, a lot to get into today. Start off with a question from the listener, and it reminds me you can submit questions on Twitter or on the Facebook on the website, which is energyweekpodcast.com. Link to that in the show notes. This is from at Man United Forever, super smart guy. Hey Ryan, another great episode of the Energy Week podcast with Ellen. I wanted to get your take on maybe. Can you ask with your sources? You briefly touched on this in the past episode, but the energy sector's guys must be very frustrated with Trump's current policies and maybe is losing their support. Also, he might be loosening the restrictions, but his policies are outweighing it. Not sure why, but the last 2 days, gas prices at the pump have been increased, even though WTI Brent price is falling. Also, could you discuss with Ellen why companies would not do M&A during the weakness? I would hate to be an investor in Oxy to pay for Apache's elevated prices, and now they're being sued, and rightly so. I mean, let's see here. I think there's one more question there. What a difference a month makes if you're an investor in Chevron. Now, I'm happy you've got $1 billion, obviously, which I don't, good for them. And now I can shop around for depressed companies at the Balkan, Permian, or wherever they might be interested. I have a list of companies I like to follow around and trade that are absolutely getting crushed since Trump's tariffs. Just like last year, cash flow positive when everything was fine before October. So a lot to get to. Now, we've got a piece about the gasoline we're going to discuss from you, actually, later on. So we can skip that, I think, for now. But let's talk. I can just kind of tell you what I've been hearing about the folks in the industry and Trump's policies. Curious your thoughts on. I can tell you that there is definitely some frustration, but you have to take it from the standpoint of when we think about policy, there's policy that is economic, and there's also policy that's more morality based, or you remember when Bush was second Bush was running, he was compassionate conservative or something like that was the term they'd use, and that had to do more with his moral stance. So you have a couple things there. The policies are one of them, but also in the oil and gas industry, there is a big fear of the Democratic Party. I don't want to say 100% across the board, but definitely the more kind of blue-collar folks you meet, they're definitely going to be more fearful of the Democratic Party, whether that is a right or wrong perception. It is there. So I think you do see some folks who are a little bit more white-collared, who have a little bit more capital to kind of change their situation, if you will, are going to sway more Democratic or Republican, depending on what's going on. They just have the means to navigate that system. My experience is that the folks on the ground are definitely more Republican voters, and so Trump would have to do a lot to really lose their vote. I think my comments are, Ellen, is that if you do see the price fall, and then the Democrats are smart and they leverage Trump's tweets against him, saying that he's pushed for this, and you have people out of jobs, Trump won on getting Americans jobs. If you use his record against him, whether it was right or wrong, to say that he cost Americans jobs, I think that would be damaging for him. But that's kind of been my experience with the folks in the oil and gas industry. You're from a little bit different section. What's kind of been your experience?
Yeah, I think, we've talked about this idea that there is actually a lot that Democrats could leverage considering what's been going on. And we've both been kind of surprised, like, why not? It just seems that they're all in on the social policies and these kind of large economic ideas that aren't necessarily panning out for them. And it is surprising because someone really could leverage that. On the other hand, I definitely think that there are people, there are manufacturers. I mean, I'm not necessarily talking to them, but I kind of try to follow this and see what people are saying. And that's that, yeah, they're frustrated with the Trump and with the effect that tariffs and other of Trump's policies are having on their businesses at the moment. And particularly because it just puts this uncertainty ahead of them, and they don't want to necessarily hire more people or spend more capital in this time of uncertainty. But there's this idea that they've been taken advantage of for so many years, and yeah, it's painful now, but the problem is actually someone's actually trying to address the problem. I do, however, think that if it doesn't get resolved, that he could lose their support. So they do need to push the resolution of these trade issues to eventually get rid of the tariffs. People are willing to deal with some level of instability and economic instability for a certain amount of time, but then at a certain point that they won't be willing to deal with it anymore. And so the clock's definitely ticking. I wouldn't be surprised though if Trump is able to somehow finagle more time than anyone thinks that he should have, just because we've seen it before.
Right, and he got a small win with Mexico over the weekend, I guess, or it was late last week. I'm trying to think when that news broke. So he did pick up that victory. As for the M&A stuff, I think it's Drilling Info has said, I think it's them, don't quote me on that, but that they expect the M&A activity to pick up. My general take is that probably right now you're seeing the companies are probably overvalued, if I had to guess. I don't know that, but if you go back to a couple years ago when the prices were depressed and everyone was unloading stuff, you're picking up stuff in bankruptcy. And we're going to talk about the need for capital in the oil and gas industry here at the end of the show. I would guess here that we saw a deal today. Covey Park was purchased by the Comstock Resources. And I haven't looked at it much, but it seems like they probably overpaid for that. So I would guess that you're probably, if you're going to go some serious mergers and acquisitions right now, you probably be paying top dollar. And if you think the market is going to have a reset and go back down, it won't take long to pick up these assets for 50 cents on the dollar or whatever it may be. If you think the market's going to be strong and it's going to uphold, the longer it goes, you would presume that the value of those companies would go up, so they'd be more expensive. So I don't know if it said anything about what's actually going on. I would just think that right now, if you have any reservation thinking that you may have a bear market coming up here, you might want to wait just a few months because you could pick them up relatively cheap then.
Yeah, I mean, I think that I do think that there's a case that Oxy way overpaid. But look, I didn't Rex Tillerson just say the other day he's like, yeah, I way overpaid for XTO.
Mm-hmm.
Look, it happens. You cannot predict. I've constantly said you really cannot predict oil prices. I mean, how many banks were out there saying oil prices are going to be $75, $80
Mm-hmm.
now? Average price $75, $80. They're still saying it. In fact, I wrote a piece about this in investing.com last week, saying, look at these banks are still saying that the average price of oil for 2019 is going to be up in the that means it has to increase from between now and the end of the year. We need to see prices going up if their predictions are going to come true. So you can't predict it. I just don't think it's fair to lambast Oxy because they bought because maybe they paid a little more. They very well would have thought oil prices were going up.
Yeah, I did see Tillerson say he overpaid for it. And it's interesting for him to say that now because obviously he's not the CEO.
Exactly.
But the acquisition of XTO did put them in a different space than they were, and depending on how their Permian assets shake out, just having the ability to go in there and do that, the added functionality that XTO give them, I'm curious if 5-10 years from now we still look at that, but that's neither here nor there. All right, let's get into the gasoline question and the oil price question. I think we have some articles later on. Let's start with Reuters though. Challenges slow Mexico's $1 billion oil hedge this year. An interesting article here. So I'm familiar with how Mexico hedges their oil, but I did not realize, really on some level, it's like that's kind of how they keep their country going is on some of these oil hedges. I didn't realize the amount that's being leveraged here with these hedges, and it seems like right now that the banks are saying, you know what, we know you want to hedge, but these banks aren't confident with a set average to negotiate a hedge with Mexico on.
Yeah, and we've seen in previous years when Mexico does its oil hedge, it just completely messes with the market to the point where I've seen there was one time, I think it was last year, it just completely like crashed. It looked like it was crashing, and it was like, oh my God, what happened? What happened? And some analyst got in there and was like, Mexico's doing its annual oil hedge, and they're hedging it at
Mm-hmm.
like this price, and
Mm-hmm.
it's just that much that they affect the market. And then it went back up, but it was just like everyone was freaking out until they realized what was going on.
Yeah, and here's from the article: Mexico uses the oil hedge to protect oil revenues because their primary source of government revenue. Mega payouts in 2009, 15, and 16 were enough to cover the cost of hedging for more than a decade and a half. Public data shows, which the government considers a success. I would hope so. three years gets you a decade and a half.
Yeah. One of the things that I thought was really interesting about that was, so it says, so why is it having such a hard time now? So that there's stricter rules, including a near total ban on proprietary trading for banks in the U.S., dampen the risk appetite for these kinds of operations. But also they were talking about the issue with the type of crude. It says their Maya heavy crude, which is their primary oil for export, has usually traded at a premium to benchmark U.S. crude oil for the last 8 months. I don't think that's so unusual. I mean, maybe it's unusual, but we all know why. And the heavy crude is trading at a premium. So and they're saying that in particular has made this hedging issue more risky and more difficult because of this particular type of crude. But it kind of brought up this issue, and there's this issue, and I saw it being debated on Twitter about whether the type of this crude, the quality of the crude oil really matters. And you have some people out there saying, yes, it matters. It's a huge deal. It's the biggest deal. It's all we should be talking
Crude
about
quality
ever.
matters. Yes.
And then you have some other people like that is following this guy, I don't know his name, Gary Ross or something. He's like, it's really not that big a deal. He's like, I worked in these refineries, like they can handle this. It's really not that big a deal. And the whole thing just like blew up in this gigantic argument. And I don't know. I mean, how big a deal is, maybe we should do a whole program on get some people on here and argue, like, does it matter? Does it not matter? Or does it matter, but just not quite as much as we think?
Right. See, and for me, the question is, I'm willing to concede that the refineries, especially in the U.S., are set for a certain type of oil, and I'm not sure the time it takes to retool and refit them to handle a lighter blend. But the argument is more than that. The argument is that someone explained to me and you one time in a Twitter message that the lighter oil is like saying you have a beer except for there's no alcohol in it. So they said that the oil we have is not really oil itself, and I'm not sure if that's actually true or not because of some of the other things that we see internationally. So it's funny we covered this story like this Textile Gas podcast this morning. It was talking about some of these issues, and it's very hard because there's such strong opinions. And one of the things to me that kind of sticks out here is that part of what we're debating is how things have been for so long that even if those notions were right for so long, that now that we have such an influx of light crude, maybe it will change how companies research it and how they plan their futures. And the other thing is that these big companies are spending billions of dollars to go after this light crude. So it doesn't make sense that they don't. It seems to believe that they think they could overcome this issue. That aside, I'm curious your thoughts here, because if Mexico was privately owned oil and gas, minerals, and the companies could be explored by private companies, right now you would have probably a huge boom going on there because of what's going on in Venezuela. It would seem that this would be the time, if they had a free market, could really capitalize on this.
Yeah, you think that they would. I just think there's so much. Mexico is such a difficult environment to get into that we're not seeing that. And then there are all those issues with IMO 2020, and we had a really great kind of primer on that, and that, so despite the fact that heavy crude seems to, people would seem to be paying a premium for it, that it may not actually be all that useful in coming years, depending on how people respond to IMO 2020.
Hashtag crude quality matters. Okay, let's go on to our next piece. It's actually two pieces here we're going to cover at one time. One from Platts and one from Argus. OPEC output slips to 5-year low. And then the SP article read, OPEC crude oil output shrinks in May as Saudis cut further S&P Global Platts survey, according to their survey. This was interesting because it says, it starts off with Argus, Saudi production fell to 9.65 million barrels a day in May, more than 650,000 barrels per day below its 10.3 million barrels per day target. A lot of numbers there, but it's the lowest since 2014, which is kind of the biggest takeaway, I think.
Yeah. And it's interesting, and I like to always go through these surveys because Platts in particular, they do a really good job with they're officially one of those like secondary source monitors for OPEC. So although it's kind of interesting because like I get monthly emails from them, updating me with production stats and, the percent change and just a little shout out. I think the reporters and the journalists who are doing this do a really good job. Herman Wang, big shout out to you. Because it's and this is generally when I'm looking at stats for these things, I generally tend to use the Platts numbers. The Argus ones are good too, although I don't think they've been sending them out or making them public to non subscribers until recently. But they're definitely a really good source because you can't always rely on the OPEC self-reported numbers.
Breaking news there.
Exactly. Venezuela is always a lot higher than it ends up actually being. So surprise there. But so what's interesting. So if you look at some of these numbers, like OPEC production is down, and I know we're going to talk about this article a little bit later. But when you look at it, like we keep getting this information coming out, OPEC production is down, it's shrinking, blah blah blah, and yet look at oil prices.
Right.
Comes out, oil prices going up. So it's really quite interesting to see that OPEC really that in terms of messaging, they really don't have any power. I mean,
right.
Get even back when there was that huge oil glut, I think you'd still, if it was like OPEC has the lowest production in 4 years, you'd still get some jump in prices. And what's interesting also is Saudi production, because they said they're increasing production in May. And also we're going to see, I assume we're going to see higher numbers in June, as one journalist told me. It's hot as something that I'm not going to say on our podcast in Saudi, which means they need to pump more oil for electricity. Not necessarily because they do still burn crude oil for electricity, but not nearly as much. But here's the kicker. They burn a lot more gas. And so, but all their gas is associated gas, almost all of it. So they've got to pump more crude to get more gas to send to their power plants. So it's they do burn some, but they also have to do it for the gas, which is kind of interesting. But so what's interesting is just that their production is listed as lower in May than it was in April, despite the fact that they said they were increasing. I'm really interested to see. They said they were going to produce 10, and in June they're supposed to produce 10. Like, what's going on?
Yeah. So just for perspective, Argus said December 14, and Saudi said Platts rather said the lowest since January 15. So pretty much the same time period there, depending on whose information you trust. But a couple other notes from Platts is it said that sanctions hit Iran at 2.45 million barrels per day, near a 31-year low. And then on the counter that is Iraq surges to all-time high of 4.82 million barrels a day. Now, we've had some folks that have told us that theoretically the Iraqi oil could be Iranian oil. Do you think that's part of what's going on here?
I really don't know. I mean, how, really, they have a pipeline. I mean, where's, I saw that video. Someone sent a video of these smugglers in the mountains smuggling oil on their motorcycles.
I think we talked about that. That can't be that. I agree.
It cannot be that. I mean, they're spending more gasoline to drive their motorcycles than they can carry in crude oil. So there's no way that this is an actual thing.
So you're thinking coincidental?
I don't know. I mean, so look, the Iranians and the Iraqis were supposed to have an oil swap. They Iraq was going to send them northern was going to send them oil from northern Iraq, and Iran was going to compensate with by sending them southern Iranian oil. And then they didn't do it because it's apparently the Iraqis claim that they were unsatisfied with like the security procedures to truck that oil. Are they doing it anyway? I mean, there could be some. I mean, I don't know. Iraq wants to increase its production anyway. Is Iraq then like secretly paying Iran for this oil? I mean, that would be like a great thing to like uncover. But just because it would be a great thing to uncover doesn't mean it's actually happening.
Right. So let me ask you this. You've alluded to this a couple times now. Let's just kind of put it out there. There's plenty of signs that should indicate that the market should be heading upwards. We're seeing some in this article, and there's other things. Is it that the market is just overpriced right now? And that, I mean, because this is in a crazy theoretical world. Let's say Venezuela tomorrow gets its act together, and they start producing oil and start getting their numbers back up. The market doesn't seem like it could actually handle their production right now. Let's say that the sanctions get lifted off of Iran. The market doesn't seem like it could handle. So, we're talking about the prices. I don't know what it is today, WTI or Brent, but was it 55, 65, something like that's the range. But you're looking at that going, well, wow, okay, we're hanging in there, but are we almost hanging in by a thread, or am I missing something? Because we have a lot of things going for us right now, and Brent's 62 and WTI is 53 right now.
It's a really good question, and I think it has to do with two things. I think that the market is obsessed, like seriously obsessed and fixated on global economic data and whether there's going to be a global economic slowdown or a recession. I really believe that's all the market is into right now. That's, any piece of like small, like the treasury, like bond yields are down and, WTI falls. So I think that they're obsessed. There's an obsession and a fixation on that. And that's helping keep prices down. But and there's another aspect to this. I think it's two things. It's first of all that the U.S. is producing like 12.4 million barrels per day right now. So you've got this robust, strong U.S. production. You've got a market that's fixated on they're fixated on looking for signs of slowing economic growth. And I think that those things are pushing oil prices down when they should be going up, because trading really does work a lot on sentiment. And the sentiment right now is that the fundamentals don't matter, or they're really just not paying attention to the fundamentals, because given how much oil is off the market now, I mean, if we were to say that there is no like role for this kind of sentiment and that it's all based on fundamentals, then by all rights, oil prices should have been in like the teens in 2016. Then we're saying like we should, 26 shouldn't have been the low. It should have been like 14.
Right.
So I don't necessarily buy that. I think that, we're seeing tightness in the market based on these outages or not outages isn't the right word, but based on sanctions in Venezuela and Iran, and outages, and we've seen outages in other places, and lower production from Saudi Arabia. I think that U.S. production is robust and strong, and that makes the rest of OPEC less influential in terms of moving the market based on news. And then you just have this utter fixation with some sort of global economic recession that may or may not actually appear.
I've often wondered how much a recession is brought on by the fact that we talk about a recession. Like people are like, wait, there could be a recession? Maybe I should quit spending money, or maybe I should quit doing stuff because there could be a recession. So, and without those out there, we need to get Nate on because not Nate. We need to get on Gene Epstein, Nate, while we're talking about this, because he was looking at the inverted yield curves, I believe, a few months back, and he said he didn't have enough data. So maybe later this month or early next month, if Nate's out there, he can get us Gene Epstein back on.
And I do think that some of this, like, everyone latches, like there was some like stat I saw today about the job creation. And it was like, there were fewer jobs created, like this month than there were last month. And like, literally it was like, the difference was like 1,000 jobs. Yeah, and like statistically, that is completely inconsequential. I mean, come on.
Right.
But but the other thing is, but I do think that some of the data is being magnified by companies who they're hesitant to expand because of the uncertainty in terms of the trade negotiations. And so they're just holding on. They're like, I'm going to wait out another couple months, see what happens. It could very well be resolved, but they do, I think there is a hesitancy to spend because of that. If it looks like things are going well, I do think we will see a pickup, and maybe there won't be quite the obsession with the inverted yield curve.
Well, and on that news, we don't have a story, but I did see a headline before I hopped on here. Trump's threatening, I think, by the end of the month after the G20 summit, whenever that is, to raise the tariffs on China. So, again, so that would be, I'm assuming that was on, I didn't read an article, I just saw a headline, so I would assume it's on top of what he said a couple weeks ago. So there's more escalation theoretically happening there. Okay, let's go down to Reuters, back to our favorite country, Iran. Iran has no plans to leave OPEC despite tensions, according to the oil minister. Now, this is a question I've wondered about for a long time, and you are the resident scholar here, so when we look at the Middle Eastern tensions with terrorism or war or not getting along, I found it interesting that they can sit together and trade oil. I know you understand this stuff and you follow it. I've theorized on some level that it's a lot more for political maneuvering than it is for any real hatred, at least at the top levels of government, especially over there. What are your thoughts on this? Because it is a fair question to ask. The Saudis are kind of always on Iran's case. The U.S. backs the Saudis. Of course, we did have the war in Iraq, and you kind of, so what is your thoughts? I mean, it's a fair question to ask. Just Dr. Ellen Wald, what is your official theory on why they can get along just to sell oil?
I think it's because money. Because money is more important than anything. Money is more important than religion. Money is more important than ideology. Money is more important than old hatreds.
I'd like to test that theory out. If they send us money, we might not criticize them anymore. So if you send us a bunch of money, we'll consider it. I don't know until you send us the money, though. I can't say.
Oh yeah. But and you can see this, and I've looked at going back to like the 70s when before the Iranian Revolution. Okay, Iran and Israel were buddies. Iran was sending Israel lots of oil, and yet then they went and supported the oil embargo against Israel. I mean, against the United States because of Israel. I mean, come on, it was all about money, and you could see this, in fact, because after they did this oil embargo, then OPEC sat down. They were like, hey, look. We get to actually set the price for oil now by ourselves. So let's debate it. And Iran was like, high. We want the highest price ever. And so it's like, whoa, slow down. You charge the highest price now, you're going to kill demand, which is what happened. And so, this is Iran under the Shah, which, wanted to buy tons of weapons from the United States and sell oil through a pipeline to Israel. So I think it's money. I think it's all about it. But I also think in this case, there's definitely tension, without a doubt. There's definitely tension between Iran and Saudi Arabia in OPEC. But I think it's also precisely because the political tensions are having an effect on oil. And there was a lot of tension during after the Iran-Iraq war. There was a lot of tension because the Gulf countries had all sided with Iraq, with Saddam Hussein, and then Saddam Hussein wanted to they'd set these quotas for oil, and Saddam Hussein was upset because Kuwait was cheating. Believe it or not, usually we talk about Iraq cheating, but Kuwait was cheating, and also he said that they were pumping too much oil from their shared oil field, and so that was one of his justifications for invading Kuwait. OPEC didn't like, obviously, that he invaded Kuwait. Right. But in the end, they were like, yeah, Kuwait was cheated. Like Kuwait was actually cheating, and that was pushing down the price of oil for everyone. So when they are able to kind of put aside their political issues to sit down at OPEC, the interesting thing, and I think the reason people are asking this question is because Qatar left.
Yeah.
And Qatar had a really good reason for leaving, which was mostly that it doesn't really pump that much oil.
Right. It's more
It's
gas.
more of a natural gas.
Yeah.
So they're like, look, we don't sell that much oil. What are we doing in this thing dominated by the Saudis? Like, those skin off our back, we're leaving. And they had a good reason to. Iran, on the other hand, has a good reason to stay. And I think this is also revealing about the way Iran looks at what's going on with these sanctions, because Iran's like, look, we're not able to sell that much oil, although there's some interesting things going on there. I've been follow on tanker trackers because there's some more ships of Iranian oil that are clearly getting out there. But Iran's not really selling much oil. They can sell up, they can pump at least 4 million barrels a day, which puts them up there as like the second highest producer. So they theoretically can play a big role because they can be second fiddle to Saudi Arabia based on how much they're pumping. They just are right now. So if they leave now, they'll lose opportunity for influence later. So they're seeing it as, for all we know, in 2 years, the sanctions could be over. So why would we bail now? Plus, while we're here, we can cause problems for the Saudis.
It seems like the ultimate power move would be for Iran to try to partner with the United States to nudge out the Saudis. That should be their move.
What they should be doing is they should be sending people to Russia.
Oh.
And try to snag that relationship away from the Saudis and the Russians are tight.
They romance. Should be
trying to Zanganet and Novak should be like hitting up the Russian bar scene or something, or going to soccer games together or whatever.
Well, on
free
that
advice,
note,
Iran.
Yeah, free advice. We're not charging you anything. Free. On that note, this is from is it TASS or just TASS?
I don't know. I should say
TASS. Potato. Saudi Arabia's energy minister. The benefit of participation with OPEC Plus is obvious. Well, how dare you ask the question? Okay, he didn't say that, but he might as well have. We've talked about this, and we just loosely touched on the romance there. Is it obvious, Ellen? Is it obvious?
Well, so this I thought was really interesting because I don't usually pick articles from Russian news agencies, as we know. I will not do RT or Sputnik. However, TASS is really this is just the printout of the interview.
Yeah, it's a transcript. We should point out.
So this is a transcript of an interview, and it's there like for official news service or whatever, official, whatever that means. But I thought this was interesting because, first of all, I thought Al-Fali's assessment of Putin was interesting. He said, I see him as a serious and thoughtful leader. He only speaks about things that he has already decided on. It made me kind of think back to what President Bush said about Putin, how he said he prided himself on reading people, being a really good judge of character and reading people. Right. And he got Putin totally wrong. He's like, I met him, I looked into his eyes, I was like, we can work with him. And then later he's like, I was completely wrong about that.
I was at a oil and gas deal, and I'm trying to think of who, is it Gates maybe? Anyway, I think it was Gates. Anyways, there was a former secretary of something, and he was the president of Texas A&M University. I think it was Gates. Anyways, and he said he mocked Bush for saying that. He said, "Yeah, President Bush said that he saw this, but when I looked into his eyes, I saw a stone cold killer."
I remember that. Yes, I know exactly what you're talking about. I don't remember if it was Gates or not, but I definitely remember that.
Yeah. So I kind of chuckled when I heard that. Anyway, sorry, go ahead.
Anyway, it's just kind of an interesting thing to keep in mind when you think about how the Saudis are assessing him. And so basically he's saying, Novak and I have the same conclusion. The oil market needs us to continue overseeing it and guide it towards stability. That will never happen. And basically everyone's agreed that we've got to extend the cuts. He's like, everyone, Oman, Kazakhstan, Azerbaijan, UAE, Kuwait, we're just waiting for Russia. And he's like, I will wait for the Russian dynamics to work themselves out, which basically is waiting for Putin to call up station and saying, shut up.
That doesn't go over well when Russia calling Putin, telling him to shut up. I don't think.
No, Putin's going to call station
I'm
Sorry,
sorry.
he's waiting for Putin. So Igor Station
Okay.
is going around saying like, we're going to pump more, and if we don't get the chance to pump more, we want the Russian government to compensate us for the money we're losing. I think Putin is just going to have to call him and say, enough, cut it out. We're doing what I
Send
want.
send over one of his boys to take care of that problem.
Did you see the pictures from who was the guy, Transneft, the CEO of Transneft, when Putin called in the CEO of Transneft, the guy who's in charge of the pipeline that was contaminated?
Oh
Oh
no.
my God, it looked like Putin's like holding his pencil. I'm like, oh, he looks like he wants to stab the guy with a pencil.
Well, yeah, and it's interesting because in the United States, if that happened, if ExxonMobil or Kinder Morgan or whomever had a bad pipeline, the president might be involved for some political fallout, but it really wouldn't impact. If Kinder Morgan had a contaminated pipeline, there'd be some political fallout he might deal with, but he wouldn't be concerned because it wouldn't be his company. Whereas these are Putin's companies, more or less.
Oh yeah, I mean, and this was 1 million barrels a day of oil to Europe. So yeah, um, but what is interesting is that he also talks about the Novatech agreement, which I've been wondering about for a while because we heard that Aramco was interested in this deal with the company Novatech in Arctic LNG, and then like we didn't really hear much more about it. And the next thing we know is Saudi Arabia is investing in Aramco wants to invest in
Right.
U.S. LNG. So they asked him about it, and he says, "No, it's not true. We haven't withdrawn from it. Aramco extended the offer, and we hope that the offer will be accepted by Novatech. Aramco is interested in global LNG, but it also has to be commercially attractive, which is why they signed the MOU with the US." So he's basically saying, look, we're interested there. Where he's not the CEO of Aramco. Aramco is interested in a lot of stuff, but it's got to be, it's got to give us a good return. At maybe going to the US is a way to say to Novatech, hey, give us a better offer, counter us. Because so he's like, they're also willing to sign with Novatech. We're hoping they'll agree to Aramco's offer. It's a commercial transaction, so it has to be profitable for both companies entering into the agreement. Novatech is a very sure investor, and they're looking for the best deal. So is Aramco. So that was interesting because a lot of people had said that they thought that was done.
What did you think about their comments? It's the last comment on this article, at least, about their nuclear plant construction. They talk about it. They make a couple interesting comments here. I thought one was that they're looking for more experience, which is kind of an admission on some level that they're probably not fully ready to go all in on this. But they quickly shifted back to their renewable program and wanted to kind of tout that as, hey, this is what's going on. And
Oh yeah.
it's funny because we've talked about nuclear on the show before. It seems like that would be I don't, at least in some parts of Saudi Arabia, would be a very viable solution. But this renewable thing is it a source of pride for the folks over in Saudi, or is it more for international acceptance?
Yeah, I think it's both. And this was actually I actually missed this when I read the article.
Mhm.
So thanks for highlighting it. I actually had an article that was published in opinion piece published in Arab News today talking about why Saudi Arabia really does need nuclear power.
Mhm.
They're a good candidate for it. They really do need it because they need to diversify their energy generation mix, and they just can't. There's no possibility for hydro. And hydro is what is a main diversifier of electricity generation in many countries in the world, and it's just not an option for them. So nuclear is a really, really good option for them. What they say about experience is typical of this is how, and this is how Saudi Arabia has done it, but it's very typical of Aramco. And so I think like when Al Fali says this, you can see his like deep Aramco roots.
Mm.
The way they always work, the way they do anything new, and I think this is why they're going into these global LNG deals. When they go into something new, they want to partner with someone who does it really well. They did this with, I can't remember what type of plant it was, but there was some plant that they wanted to build near Kuwait, and they ended up partnering with Chevron because Chevron did this same thing really well in California, and they wanted the Kuwaitis to get in on it too. And the Kuwaitis were like, no, we don't need Chevron, we can do it ourselves. Whereas
Mhm.
Aramco is like, no, we want to learn from the best. So because the way they see it is, we're not experts in this. We've got the money. We're going to buy the expertise. We're going to, do a joint thing or whatever. We're going to bring these people in, or we're going to go elsewhere. We're going to learn it. Once we know how to do it, then we're either going to buy it out or we're just going to do it ourselves. And that's what they've done with everything. Every time they need to do a new oil technology, gas, they go abroad to acquire the expertise they don't have until they've learned it. And so this is basically saying this is how we do stuff. This is our strategy. I do think that he's pushing the renewables because he knows that the nuclear stuff is a very sensitive issue, particularly with the US. And so he just wants to push it back to renewables.
Let's turn now to a piece from The Hill by our one and only Dr. Ellen Wald. Now, I got to ask you, you're in these big bourgeois publications all the time. These comments always crap you up. It says, by Ellen R. Wald, opinion contributor, and it says, the views expressed by contributors are their own and not the view of The Hill. So when I read that, I take it to mean that every journalist they have on staff and every opinion that they put out are the view of The Hills. It's weird. It's just weird. It always cracks me up. It's like, it's like, so everything your reporters, your folks on staff, every opinion they put out is your opinion, which is a weird. I wouldn't want to take that kind of burden. So I will say for this podcast, the opinions expressed here are Ellen's. Or half of the podcast. So, Ellen, why, in fact, are oil prices dropping this summer? Which is good news for consumers.
Yeah, and I'll admit that I talked about that a little bit earlier in the podcast about this. It's this combination I see of American oil production and then also this obsession with the global economy. But I do think that it's kind of funny. So I wrote this piece and I was like, this is really convoluted, like this point that I'm making. I was like, this is really convoluted. Like, no one's going to want to publish this. Like, who's going to want to read this? Like, where I got like explaining that, that really oil prices should be higher and why they're not, and the role that American oil production plays and like the perception that traders have. I was like, who's going to? I sent it to The Hill. They were like, yes, we will publish this in 3 days. It's like, okay, no problem. I mean, so I thought it was a little bit convoluted, but apparently people liked it. Although I was looking at the comments and people seemed to be very confused between oil prices and gasoline prices. And I'm like, but gasoline prices just went up twice in my state,
Right.
Well, or gasoline prices were so high on Memorial Day. Well, first of all, none of them are remembering what it was like last year. It's definitely higher.
Right.
And also, like, gasoline prices do not equal oil prices. Oil prices are a big component of gasoline prices, but it's not the same thing. So, like, yeah. I was called the Trump shill and, all sorts of other things.
I was looking at the comments.
Should not read the
Yeah, you don't read the comments. I'll read them for you. Someone said, that's funny. Oil prices went up 10 cents a gallon where I live. And someone put oil prices, Crisco?
Yeah, I thought that was good. Sometimes I'll click on an article that looks like it's about oil and it'll end up being like olive oil.
Olive oil, yeah. It's funny because, just kind of scrolling through some of these comments here. It's like, okay, yeah. I don't understand some of the political persuasions of some folks. Of course, I am a right wing propagandist, so it makes sense that I'm tough. Where do we think into the summer? I know you don't like to predict, but in the summer, we got the OPEC meeting, which is the first week of July, right?
Well, so good question. Apparently, it's still on for last week of June.
Last week of June. Okay.
Yeah.
Last week of June. Okay.
I don't know yet if I'm going to be there. I'm leaning towards no.
Okay.
But we'll see.
So right in the middle of the summer, we'll have more to know about what's going on. We're a few weeks out. Any predictions on what people might be, what might come out of that, or maybe any topics or headlines folks could follow between now and then to watch for that might influence what they're going to say?
So I do think that at the G20 meeting, Russia and Saudi Arabia are definitely going to be meeting again. And so while everyone might be watching Trump and Xi to see if there's any indication of the resolution of the trade talks, I would definitely also watch Novak and Al-Fawli, who will be there because they may be looking to basically do a deal, essentially, like have it be a done deal. I'm leaning towards basic rollover. It seems like everyone's on the same page. However, I think it's basically a toss-up. Either they're going to have a basic rollover or the whole thing is going to go down and go up in flames.
Okay.
And there's a possibility of that.
Okay. Well, speaking of going down in flames, let's talk about something near and dear to my heart, the frackers out here in the great state of Texas and across these United States of America. Frackers are looking for cash, Ellen. Breaking news. They're struggling. Here we go to our favorite publication, the Wall Street Journal. I will say I did read this piece, and I didn't see the glaring contradictions like in the past where they readily admit that they didn't have all the data, even though they were being critical. You know, my initial takeaway from walking away from this was we've asked them to make money. We is Wall Street, not me, but the collective is, hey guys, you got to make money. Now we're reporting that they can't make money. Is kind of the thrust here, and you couple that with banks aren't going to give them money. I know on the Texas Oil Gas podcast, and this isn't just us, other folks in West Texas as well, believe that ultimately we're going to see a more consolidated Permian Basin in the long run anyways. So if the Wall Street Journal is right here, it just seems like we're heading in the direction that probably we're going to head in anyways. It might just be expedited a little bit. That was kind of my takeaway. What was yours?
Yeah, I mean, I thought this was a very interesting article. Yeah, I really just wanted to get your take on whether or not it's really true. A lot of it, it also just seemed to me like the first couple paragraphs there was no attribution until you get to this Rystad stats, and I was really curious about I mean, is this really even true?
Right. Well, and one of the things the commenters points out is they kind of mix terms here a lot, and of course on this show we kind of throw out terms pretty loosely, but we're not the Wall Street Journal, so we have a little bit more leeway. But they do kind of throw out terms a little bit looser. It's kind of hard to make sure that they are being consistent in who they're referring to. I'm not sure. We had a listener I met the other day, and one of the things he pointed out is that they were being told he runs a small E&P company, and he's being told that they don't look for go out there, buy some acreage, drill some wells, and try to flip it, which is that kind of wildcatter mentality is, hey, we're going out here and do something, and then we're going to turn it into just mega bucks. He's saying that mindset's kind of dried up. My point earlier about if prices were to go down on the MMA stuff kind of falls in here. If you're sitting here and you're looking at, what are you going to do? You want to pick up those assets, obviously, cheaper unless you expect the prices to rise. It doesn't feel like, with economic worries, that we're in a spot where you can reasonably presume that the prices are going to go up to 100 right now. You don't really, obviously it could happen, but the path to get there is kind of murky. I don't think the prices are going to go to 20 either, but with that being said, if you're sitting around going, what are we going to do here? If you go back and look at some of those deals that have been done the past couple of years, in my opinion, there's plenty of deals where companies overpaid for the assets at that time, a lot worse than what Oxy did with Anadarko here recently. So if what they're reporting is true is, hey, that they're not making money, then there could be deals on the table if prices stay at mid-50s, low 50s, or high 40s in 6 to 12 months. So that's kind of my takeaway. But this is such a sexy topic. It's always hard to understand exactly. I mean, there's an article about this every week. They're dying, and it's like, I don't know. They're not dead yet. They're like Jason or Freddy Krueger.
Yeah, just can't kill it, which is a good thing, honestly. And it's interesting because they're saying they're saying some companies are exploiting the junk bond market. Alternative lenders are offering interest rates as high as 13%, as much as 7% higher than lower yield bonds. But there's still room to cut costs. It says these costs are the reason why companies are exploring drill co partnerships this year. I mean, I definitely think seems like they're wherever there's a tightening, they find another place to, cut costs.
Well, see, and this is part of my problem with articles like this, though. It says Pioneer Natural Resources, one of the top shale companies of the Permian Basin of Texas and New Mexico, is looking to pay for for drilling some of its less promising acreage through the partnership that goes on to talk about the drill co deal. It doesn't mention that they've laid off, I think it's 800 people now, which cuts a ton of cost. It's a lot of cost. So there's no mention of them being, and I'm not glad that people lost their jobs, obviously, but it's just a fact. But there's no mention that they are doing things to cut their costs to make to be able to make money or increase their margins. And so when you read these pieces, you always have to kind of look at in the back of their mind is, listen, they ain't got to break down the impact of how much money they're saving with the layoffs, but you should at least put it in there that Pioneer is doing things, and there's things like that are being done to increase profitability. And so it's kind of hard to really understand how you would assume, if me and you know that, Ellen, that the Wall Street Journal would know that.
Yeah, I mean, hey, this was an interesting article, and maybe Christopher Matthews would want to come on and talk about it sometime.
Be happy to have him on. I got to say this. We did have to make fun of the Dallas Morning News the other day. They read an article titled, "How Bad Are Pioneer's Job Cuts?" At 27% of workers, they're deeper than after 9/11 and the financial crisis. So now, when you hear that, you are thinking that they cut more people than what was cut then, right?
Yeah.
It's percentage based. Only percentage based. It's like the stupidest article ever put out by mankind. Because American Airlines laid off 20,000 people, United laid off, Continental cut 12,000, Boeing cut 30,000, Pioneer 877. But it's worse than 9/11 or the financial crisis. And I said on the podcast at the time, just to be clear, if you have a company with 4 people and they lay off 2, by definition, that would be worse than 9/11 or the financial crisis. So this is a pandemic epidemic that we are having companies laying off worse than the financial crisis every day. So just for our journalists that are out there, if you write articles like that, you will be made fun of. I'm sorry. It's
so
ridiculous.
Before we sign off, I just couldn't. It doesn't really have anything to do with oil, but I just can't help. I just find this story so hilarious. So remember way back when there was this painting that was supposed to be by Leonardo da Vinci called Salvator Mundi. It's a picture of Jesus, and there was some discussion about whether or not really Da Vinci, maybe not, but whatever. It sold at auction for $450 million, which is a record. And it came out that it was bought by Mohammed bin Salman, the Crown Prince of Saudi Arabia, claiming he wanted to give it to MBZ to put in their fancy art museum. But no one has seen this painting. This was 2017. No one has seen this painting. Well, guess where he's keeping it? If you were Mohammed bin Salman and you had just bought the most expensive picture of Jesus ever, where would you keep it? Top 3 places.
Top 3 places. Now, he's a Muslim, right?
Uh-huh.
Okay, just making sure. Making sure I didn't miss something there. Okay. In a vault.
Okay.
He has a palace, I'm assuming, like somewhere when you walk in the palace. Or if you're a cigar smoker and you have like a men's cigar room with your buddies and you want to show off like a trophy room, that would be my top 3 spots.
He's keeping it on his yacht, the Serene, which is also, by the way, the most expensive yacht in the world, which he bought from the guy who owned Stolichnaya Vodka.
See, I'm not rich enough to even think about having a yacht, so that wouldn't have made it.
Apparently, the place to keep your picture of Jesus
is on your yacht.
That's $450 million. Is your yacht.
Is the picture worth more than the yacht?
That's a good question. I actually knew how much about the yacht for because I was doing some research on this, and I could look it up. But I'm sure any of our listeners who really want to know could also look it up. But anyway, yeah. But apparently this is a thing. I was reading on something called ArtNet. Apparently, it's a thing to keep your fancy art on your boat that floats on the water.
See, you would think that water and paintings wouldn't go together.
Yeah, you would think that you would not want to keep the most expensive piece of painting like in the world, but hey.
What do we know? We don't have yachts.
Anyway, apparently they have located the whereabouts.
It's on his yacht. According to this, you can have 24 guests, 15 cabins, and 52 crew members on a Serene yacht. This is one from 2011, so I don't know if these are the same or whatnot. I just Googled that.
This is the Serene. He has a climbing wall.
Oh my gosh! Wow. That's crazy.
I'd like to see them actually use the climbing wall.
Lifestyle of the rich and famous, indeed. Okay, Ellen. Well, you
On
won't be
that
on
note,
yachts this week, so where will you be?
well, I'm on the Hill with my piece about why oil prices are low right now. I will be on investing.com and Forbes and hopefully Bloomberg, but not sure if that's going to come out this week or next week.
Okay. And according to this, real quick, it looks like the yacht was $330 million.
So the painting is
Painting
actually
is
more expensive than the yacht.
right. If I don't quote me on that, but I'm just a quick. I'm seeing the number 330 million. So yeah, the painting is worth more than the yacht. When you go to sell the yacht, do you include the painting as well up the resale value? I got 330 in the yacht, but the painting's worth 450. So I'm sorry, you said HillInvesting.com, Forbes as
Yeah,
well.
Forbes and possibly Bloomberg News. We'll see. I may have a piece coming out about Iran and some interesting things there.
Okay, Texas Oil and Gas Podcast, Oil and Gas Contractors Connect, and for the listeners that were out in the Permian last week at the Texas Oil and Gas Podcast Shrimp Bowl, it was nice to connect with. I know some of them that listen to both this show, so thank you very much, and we will talk to you next week.
See you later.